Let's get across the market open now with Scott Phillips from the Motley Fool. Scott, happy Friday. So US markets were shut on Friday, but the bond market was open.
Olivia, g'day. Yeah, absolutely. US market, of course, closed for Jimmy Carter's funeral. Doesn't give us much by way of a lead, but hopefully still good news on our market here. The bond market, as you say, this is going to be the really interesting one, Australian and internationally, for the next kind of 3 and 6 months, right? We've got so much happening. The prospect of rate cuts maybe as early as February, an Australian election at some point, and before all of that happens, in 10 days' time, an inauguration of a new US president who has been unconventional in his first term and certainly unconventional again, I think, in the campaign for his second. So how that all affects the markets more broadly and the bond market in particular really matters. And of course, it matters to us for a couple of reasons. Obviously, if you own bonds, if you're a bond trader, that matters. Matters for interest rates. It matters for the currency as well. And we've seen the Australian dollar fall back below 62 cents overnight.
And Scott, what did you read from the minutes that we got from the Fed yesterday? And we had some speakers overnight as well, some comments from them.
It's really interesting. I mean, as much as we always say the US needs Australia catches a cold, the outlooks for the different economies are pretty different. I mean, they were going to have 4 rate cuts, now probably 2, because they're kind of worried about, what's happening economically as much as they are about inflation and everything else. So we've kind of got this sputtering economy, will we, won't we rate cut coming up at some point in the first half of this year. The Americans, of course, have already cut from a higher level, we should say, of course, now inflation also got higher. But it does feel like they're kind of 6 months ahead of us. They were 6 months ahead when we went into that inflationary spike. They kind of came out of it or started to come out of it before we did. Doesn't mean we're necessarily following them absolutely, but the global influences on our economy are so important and so incredible that what happens in the US really matters here. I don't think there was a lot to be not a lot new to be worried about. And again, I think that the reality for most market watchers right now is that as much as the Fed matters, it matters a lot. What Donald Trump may or may not do, the influence he may or may not have on the Fed and how that changes will, I think, be the story of 2025, at least from that perspective. So nothing particularly new, nothing particularly to scare the horses, but I guess a real wait and see because of those kind of macro and geopolitical changes over the next 3 or 4 months.
Okay, Scott, and tonight we'll get non-farm payrolls data for December, expected to show 160,000 new jobs were created in December. So how important is this data going forward?
Yeah, it's going to be really, really vital. I mean, we know in the US, like here at home, the 3 legs of the kind of the interest rate and inflation, or the interest rate stool, are inflation, unemployment, and GDP growth. And so the non-farm payrolls, their version of our unemployment numbers, obviously we get them more frequently in the US, which kind of makes it both bumpier, but also easier to kind of add another week worth of data to the series to kind of work out what's going on. But you're right, the strength or otherwise the labour market will absolutely be a key part of what we see going forward from the US Fed because it is such an important input. 160,000 jobs is a pretty good number. I suspect we'll start to see that maybe taper off a little bit as some of those jobs get filled through 2025. I'd love to think it'd be the opposite way around, but effectively the inflationary challenges remain, and we are going to get back to that kind of, I don't know about limitation in terms of number of jobs available, but certainly as the unemployment number goes down or jobs continue to rise, you do end up with that labour force pressure that we've had here in Australia, which is a low unemployment rate, the wrong people in the wrong places for the wrong jobs, which makes it really tough and does put that upward pressure on inflation.
And now let's talk about the UK and some of the challenges the economy has there at the moment.
So this is fascinating. With the lettuce emojis are back on social media. Of course, the Liz Truss kind of prime ministership didn't outlast the lettuce, and a large amount of that were because of the UK fiscal policy and the way the markets reacted to that. Now we've got at the moment rising UK bond yields. We've got a falling UK currency, particularly against the US. Now part of that is US dollar strength, as we've seen with the Australian dollar as well. So we have to separate out what is UK weakness, what is US strength. Same impact, of course, but the causes matter. But we have got a really significant challenge over there. They've got to try and work out what fiscal policy really is going to do. I have to say too, I'm a little bit surprised it's happening in the UK specifically, given the challenges in the US, for example. They've got massive debt problems over there. The fact that the UK in particular is being, I guess, singled out by traders may be a case of when the reserve currency, when the default currency is US dollars, it's easy to compare other things to it, and that probably gives the US economy a bit more breathing room. But I got to say, both of those countries have significant debt challenges, significant fiscal challenges, and significant deficits they have to deal with. As do we, by the way, here at home. We are better than those two. Doesn't mean we're great, by the way. But the UK, because it's not the US, because it's a very large economy, becomes the focal point. And as you kind of point out, those rising yields in the UK, particularly the 10-year bond yields, at the same time as we've got a falling currency, really does put a heap of pressure on the UK government. Whether it's enough, whether it makes a difference is an open question. But there is a lot going on over there. And it is a watch out, I think, for economies globally, countries, of course, but economies globally when it comes to fiscal policy. We know governments over the past 10 or so years have kind of thrown deficits to the wind. It used to be a big deal, of course, the back in black. We've talked about that a lot in the Australian context. It's really been ignored by both sides of politics in most of the Western world. Whether that can continue in that context, I think that's the open question. I'm far from sure it can be.
And Scott, what are your thoughts on Canada at the moment? We saw the loonie drop against the greenback in recent hours, and of course the PM who stepped down announced that he will be stepping down earlier this week.
It's a function of, well, so there's two things going on, right? I think that they are related, but also very, very different. On one hand, you've got a deeply unpopular Justin Trudeau. Opinion polls, kind of John Howard 1985 style, 17, 21% type stuff. That's untenable for a political leader, and so he had to go just politically, right? So there's the domestic politics part of that, but part of it is of course because of the way that the MAGA right in the US and similar forces in Canada have also gained popularity. So you've got Trudeau losing popularity in his own right. You've also got the kind of the new right taking a lot of votes, taking a lot of share. The changes there, and then of course you've got the US government putting pressure on Canada, putting pressure on Mexico. Donald Trump, of course, threatening increased tariffs because of fentanyl and immigration. There is so much there. I think if you're Canada, this is what I was kind of referring to before with Donald Trump. We've got so much of his shtick is unconventional, but it's hard to know how much is just talk and how much is going to be policy. So if you're Canada, and if you're the Canadian dollar, you're looking at that going, well, hang on, I don't really know what to do with this here, because on one hand, we've got our domestic issues, and they're dealing with those, and they're significant. But you've also got the risk and the threat of a very aggressive, frankly, politically aggressive US, basically saying we will tell you what we'll do and how we'll do it. Given the proximity, given the cross-border trade, cross-border travel, frankly, it is a really significant issue for the Canadian economy. They are right to be more concerned than most about the impact. China, of course, is the other one, and we know that China's been releasing its own stimulus package to try and get growth despite what's been a slowing economy there for a period of time. So you throw all that together, that's why the Donald Trump presidency, he's talking about his day one priorities, all that kind of stuff. It is going to be, I think, an unsettled market right across the board, whether it's bonds, whether it's equities. We're going to see a lot of nervous traders who are trying to guess and second guess what Donald Trump might do, and therefore what the effects might be. Bearing in mind, of course, the market's already risen quite strongly on the back of his election in the first place. So not even just taking power, that the share prices, bond prices already are allowing for or accounting for what he may or may not do. So it's going to be fascinating. Not necessarily in a good way, but it's going to be the first sort of month or so of his presidency. I think there's going to be a bit of volatility while we try and bed down exactly what it means for financial markets.
All right. Well, Scott, let's come back home to Australia, and our local market is set to open higher today.
Yeah, which is nice. No lead from the US, as we kind of talked about, because of President Carter's funeral. But hopefully a positive lead for our market. And it's been a bit of an up and down kind of week and a half, right? We've seen some big gains and some big losses, again, largely on the back of what's happening in the US. But what's really fascinating about our market, and it kind of makes it more interesting for market watchers and for investors, is, again, I mentioned the US as Australia catches a cold. We tend to slavishly follow their market, usually. But the change in the composition of the US market and the Australian market has been really fascinating. We know the Magnificent Seven, those big tech companies as a group, and the broader NASDAQ on top of that, is really, I don't know if it's half now, but probably it's close to that, of the US market and market cap size. Now, compare that with our banks and miners businesses here in Australia, and you do have a sense of there are global capital movements, there are global things like we've talked about, exchange rates, interest rates, economic growth. But then you've got industry-specific stuff. And so we've seen, just this week alone, cases where the US market has risen and we've fallen, where they've fallen and we've risen, because of that mix of commodity prices, tech, excitement and pessimism. So you've got a real mixed bag. Yeah, hopefully a positive day here on our market to finish the week. It's going to be a nice way to go into the weekend.
And Scott, just quickly, what are some of those stocks that you are looking at today?
Oh man, we've got to be watching Star, don't we? It's been an incredible last 4 years. A $4 billion market cap company only 4 or 5 years ago. Another $1.5 billion of equity tipped in over the past year and a half, I think it was. So take that to 5.5 million. It's not the same time frame, but kind of you start with that. Current market cap under $400 million and a bunch of debt on top of that. The business burned through $107 million in cash outflows, net outflows in the last 3 months. They've only got $79 million left. Now, the math's overly difficult there. That's about 10 weeks at the current cash burn rate. It's going to be I don't see how Star survives in its current form. Maybe it gets lucky, desperately trying to find a lender who will give it some more money to tide it over. Problem is, if you're burning $8 million a week, you get some more money. Why do we expect that would stop, for example, right? So I don't think any lender's going to be throwing good money after bad, although it could be proven wrong. So then what? Do we see asset sales? Do we see fire sales of some of those assets to get some cash to keep it alive? Do we see the business go into voluntary administration? Do we see potentially a takeover or some government intervention? There are so many different options there. I dare say, though, what's probably not likely to happen is shareholders aren't particularly going to go well from here. Doesn't mean the shares can't rise. Dead cats bounce. They've lost 95% up until yesterday, and then another third yesterday alone from that already lower price. So look, anything can happen share price-wise, but the business itself is in more trouble than Superman, and they're going to have to find a way out. I don't know that they can in a traditional sense. I don't know that Star's going to be a going concern in 3 months' time in its current form. Again, strange things have happened. They find an equity investor, they find a bank who's going to lend them some more money. But realistically, most of the banks looking at the assets and saying, well, at least we get something back for that debt. That's probably what they're focused on. Management at some point are going to have to call in the administrators. They just legally will have to if they can't see a way clear quickly enough so they can pay those debts as and when they fall due.
And Scott, finally, Telstra and Starlink are also on your radar.
This is really interesting, right? So Starlink, of course, Elon Musk's company. Musk in the news a lot recently. Telstra have announced, as Optus did last year, a new service using Starlink to provide text messages when you're outside Telstra's mobile coverage area, literally satellite to phone. Now, these messages can take 3 to 10 minutes to be transmitted, so you're not going to do it for quick back and forth. But if you think about parts of the country where coverage is not available, Telstra say we cover 99+% of the population, but obviously much, much less of our landmass. And so that ability is going to be really interesting. But it means a few things for Telstra. I mean, they've already ditched their own satellite internet business. They're using reselling Starlink for rural, particularly internet. You can have it anywhere, I suppose, via Telstra. Optus are doing the same thing. What does it really mean? It means that Starlink is the internet provider of choice now when it comes to anything outside metropolitan areas and regional areas. And then think about what internet means on that basis for all of us and what it means for Telstra and Optus. How long do they have a mobile network and an internet network? The NBN we've sunk tens of billions of dollars into. I'm not sure it's going to be a white elephant, but I do wonder for how long it'll be used and what the return on investment looks like for the NBN if more and more people do go to different satellite operators. So, yeah, going to be fascinating. I do own some Telstra shares, a very small number. So no particular dog in the fight. I guess I do well if it goes up. But, yeah, it's the technology and the changes that are most interesting to me and how long we have national carriers as opposed to international carriers like Starlink satellite internet service.